Hi everyone. This presentation or video is on perfectly competitive markets. Okay, so let's start. The very first thing that you need to know with perfectly competitive markets are this particular market structure has two main graphs. First is the market graph and the firm graph. Now, before I continue with the graph, let us first review the characteristics of industries or companies belonging to a perfectly competitive market. Remember, we have four major market structures falling under two major categories: perfect market structures and imperfect markets. For the perfect market structure, you have, of course, perfectly competitive markets. And for the imperfect markets, you have monopoly, oligopoly, and monopolistic competition. The imperfect markets will be discussed on separate videos. Now, focusing back on the perfectly competitive market, we look at it from five major points. Okay, so first, the number of buyers and sellers. For perfectly competitive, you have many buyers and many sellers. In terms of pricing, in perfectly competitive, we need to remember that there is no price leadership here from both sides, the customers or the consumers and the sellers. They are both price takers, or what we mean by that is both the suppliers and the consumers just follow the market price. This is important when we go back to the graph. In terms of barriers to entry and exit, they have no barriers to entry and exit. So very, very minimal barrier to entry and exit into the industry. So that means if any seller would want to penetrate this market or become part of this market, they can easily do so. So no barriers to entry. And if they do decide that they don't want to continue with the business anymore, they can just easily exit the market. With regards to type of product under this market structure, products are homogeneous or undifferentiated, or they are not. The products are highly substitutable, and the characteristics are all the same. So when we say that the products are homogeneous, they are similar. Okay, and then lastly, availability of information. Here, you have perfect information, meaning both the buyers and consumers know the characteristics of the product they are selling. They know the price, they know the quality, they know where to get it, meaning everyone and anyone in the market knows all the information needed in order to participate in this market. So again, many buyers, many sellers, no price leadership. Both buyers and sellers are price takers. No or minimum barriers to entry and exit. Product is undifferentiated or homogeneous. And lastly, they have perfect information. Now, all those five characteristics are very important in analyzing the graphs for perfectly competitive market. So here, first you have the market. You can see that there's a market graph and the firm graph written or shown together like this, because this will explain how price is set up in a perfectly competitive market. So here, you can see the red and blue line representing our demand curve, the downward sloping blue line, and representing our supply curve, which is the upward sloping curve. Okay, in red. So here is our simple market representation, wherein the buyers, represented by the supply curve, are willing to sell their product at various prices and at particular or various quantities. You also have the demand curve, downward sloping demand curve, where consumers are willing to buy at various prices and at various quantities. Now, once the supply and demand curve meet, that is where we get our equilibrium price or equilibrium quantity, which means that at that point, both the buyers and sellers agreed at that particular price and the particular quantity to sell or to buy. So the intersection of the supply and demand curve is what we call our equilibrium. Here, the equilibrium price is at $10 and the equilibrium quantity is at QM. Okay? If I'm not mistaken, medyo blurry ang aking tingin. So there, you have your equilibrium price and your equilibrium quantity. That is what we call our market price or our market clearing price. At sabi natin, ang perfectly competitive takes the price of the market. They are price takers. Nobody can dictate the price level either higher or lower because the characteristic of sellers in a perfectly competitive market and buyers in a perfectly competitive market are price takers. So the market price is at $10. So there you have the perfectly elastic demand curve, okay, shown by our vertical line in black. So here at 10, not vertical but horizontal line, which is a perfectly elastic curve, sorry. So here you have the $10 price, which is adopted by the firm. So the second graph on the right is the firm graph, which is perfectly elastic, meaning all buyers and all the buyers of the firm will only buy at that price. And if anybody, okay, if any one firm tries to lower the price, let's say at $9, the whole demand curve, the whole line, the whole horizontal line moves totally downwards. And if someone tries to increase the price at $11, nobody will buy at that price. Simply because everybody has the information of prices and quality. They know that the quality is the same, the product is similar, so anyone would not buy at a higher price. Okay? So, walang bibili if the price is set up at 11, at lahat ay bibili if the price is set up at a lower range of $9. Okay? I hope you understand that. Meaning, walang matitira kasi siya ay perfectly elastic, highly responsive ang mga consumers here. The demand curve is highly elastic, perfectly elastic. So, kapag may nag-increase, walang bibili. Pag may nagbaba, lahat bibili at a lower price. Okay? So, let's just skip this curve because I was supposed to draw on this. But, okay. So, here, we can state that the firm graph now, kanina ang ating horizontal line is the demand curve, meaning that is where consumers will buy the product of the firm at that particular price. And remember our concept of marginal revenue, MR. If you sell one other unit of good and you're asking what the revenue for that good is, of course, it's kapag nagbenta ka ng isa pa uling unit, ang kikitain mo or the revenue from that unit is, yes, $10. So that's why the demand curve is also equal to the marginal revenue curve. Okay? Which is also equal to the average revenue because for every unit sold, okay, 10 divided by 1 is still, you get the $10 value. Okay? So here, if you have that curve, that is also your selling price. So, kaya, ang tawag natin dyan sa curve na yan is Mr. DARP. Okay? If you look at if you read it from left to right, you have Mr. DARP, meaning that line is represents your marginal revenue curve, represents your demand curve, represents your average revenue, and represents your price. Okay? So, para lang makita natin kung paano nakuha yung perfectly elastic curve na yan, kailangan kita nyo na kinuha yan dun sa market price. Okay, now, okay, so yung ating Mr. DARP is already there. Our perfectly elastic demand curve. Okay, so that gives us our marginal revenue. So, what are these two curves that is added into the graph? We have to remember our profit maximization rule that to maximize profit, marginal revenue must equal marginal cost. This is given in our lecture on firm theory. Okay? So profit maximization occurs where marginal revenue is equal to marginal cost. Please refer to the last graph from our last lecture prior to lockdown. Okay? So here, you can see, okay, that the red line represents our marginal cost curve and the thick black line represents our marginal revenue curve. Do not bother first with the ATC. I'll discuss that later. Just look at the black line and the thick red line. Okay, remember in our previous lecture, the marginal cost normally begins at a higher level. These are your initial capital cost, yung ginagamit yung pera kapag nag-establish pa kayo. And during the first few days of production or few weeks of production, ay kokonti pa yung napoproduce but the cost is already there. At unti-unti siyang bumababa. That's why from 5, it goes down a little bit as you produce more. Because now, you have dexterity or division of labor. Tandaan niyo yun? Na kapag nagdagdag ng isa pa uling laborer coming from one laborer, pag nagdagdag ka pa ng isa pang laborer, mas marami ang napoproduce nila kapag nagdagdag ka ng isa pang laborer. Remember our table? The first laborer only made 5, but the next laborer that you add into the production can make 13. So, ibig sabihin, kapag naka-13 ka na ng production, and then you have the cost goes down because now you have more production against your gastos. So your marginal cost curve goes down a little bit, but then starts going upwards. And the reason for that, if you remember, is our diminishing marginal returns to labor. The firm starts adding up more people, but with other factors of production unchanged. So here, nagdagdag ng panibagong laborer 3, laborer 4, laborer 5. But the other factors of production, let's say land or capital, is not changed. Then, the output produced, okay, gives us decreasing revenue overall, decreasing profit because the cost starts increasing but production starts decreasing. So now, because of diminishing marginal returns to labor, umaakyat ang ating red curve going up. And then they met MC and MR at 10. Okay? So if you look at the intersection, it's around the quantity 10. Okay? So that means that is where profit maximization occur. So again, remember our graph in firm theory. Lahat ng area to the left of the MC and MR intersection is revenue of the company. Okay? And every point after, okay, the intersection of the red and black line, lahat yan ay not good for the company because if you can see, the red is on top of the black curve, meaning the cost of producing the additional unit is higher than the revenue they can derive from that unit. So if you look at number 11, quantity 11, ang red line is about 11 or 12, but your revenue coming from that sale is only 10. So kapag produce mo ang 11 good, lugi ka ng piso. So yung lugi mong yon, ipapasok mo sa dati mong kinita from 10 and below. That means, only at that intersection can you maximize your profit. Dahil kapag nag-produce ka pa ng 11 quantity, babawas ang lugi mo dito sa overall profit mo na nandito sa yellow-green line na ito. Yellow-green line space na to, paloob. So here, what are we trying to answer here? Alam na ng market, alam na ng firm kung magkano ang presyo niya. Pero hindi niya alam kung ganong karami ang kanyang kailangang i-produce para hindi siya malulugi. So, napakasimple ng application kapag kayo ay business majors, isn't it? If you belong to a company belonging to a perfectly competitive market, wala kang choice kung hindi kunin yung market price. Pero ganong karami ipoproduce mo para mamamaximize mo ang iyong tubo or your profit? The intersection of your marginal cost curve and your marginal revenue curve. Now remember that whole space between the 10 and 10, yung yellow and green line na yan, hindi lahat yan ay tubo or profit. Kasi meron tayong cost of production. That is where the average total cost comes in. That is the blue curve. So the average total cost, okay, when it is below market price, that means you're earning a profit. Isn't it? So kapag ikaw ang iyong cost ng pagpoproduce overall ng iyong goods ay mas mababa ang iyong gastos kaysa sa charge mong presyo, you can see that the black line is above the blue line, you have profit. So, yung area yon, for example, yung 10 pinuduce mo, ang average total cost niyan ay 6. Okay? 6 pesos of your price. Therefore, yung natirang 6 minus 10 doon sa presyo, 4 na piso ang kita mo. So, the green space is your profit now because you have deducted the cost, which is the yellow space. So, once, okay, ito ang ating rule dito, kasi syempre, firm ka. Ang mga questions na kailangan alam mo ay, alam mo ang sagot ay, hanggang kailan ka dapat mag-produce, kailan ka mag-shutdown, or kailan na ganong kadami ang iyong kailangang i-produce. So, those questions will be answered by the end of the video. Una, alam mo na ang iyong price. Magkano kayo ibebenta? O, syempre, market price. Ganong kadami? O, the profit maximization point, which is your MC equals MR curve. Ganong kataas ang aking tubo? Ima-minus mo ang iyong total revenue sa iyong total revenue sa iyong total cost. So here you have the yellow line that gives your cost, and then your profit is the green line. Your green and yellow together is your revenue. The green alone is your profit, the yellow alone is your cost. So now, kailan naman ako lugi? Siyempre, dito sa drawing na ito, dito sa graph na to, hindi ka lugi kasi your average total cost, okay, ng pag-produce ay mas mababa kaysa sa charge mo na price, which is in the black line. Alright? So here is a representation of the firm gaining a loss. Your average total cost is way above Mr. DARP, or your price of the product or marginal revenue. Ang marginal revenue mo ay nasa sa $10, but yung average total cost mo ay mas mataas pa kaysa sa $10. So if you notice, the difference between the price and the curve average total cost, which is the pink space, gives your loss. So yung pag ang iyong ATC ay mataas kaysa sa charge mo na price or your marginal revenue, then you are earning a loss, and then this one can signal that you have to shut down if you keep incurring this loss. Okay? So, the loss is when average total cost is higher than your marginal revenue. Okay? Now, this drawing to the right of the firm, okay, take note that the market firm, hindi na gumagalaw yan. So, ang atin na lang ang point of analysis will be the company. So, here naman, this is break-even. Okay? So, break-even is when ATC is tangent or touching your intersection of MC and MR. Alright? Wala kang economic loss at wala ka ring economic profit, but you are already, does that mean na ikaw ay lugi? Ikaw ay break-even. So, here, this is the last of the slides, but this is important. If you notice to the right, the firm graph, ATC is way above the green line. Ibang pinagkuhanan ko ng slide na to. Pero yung green, yun yung dati nating black kanina. So the green line is Mr. DARP. That is your asking price. And then your marginal revenue curve. You still have your marginal cost curve na ngayon ay kulay itim na. Okay? So at that point, meron din dito yung drawing ng ATC, yung curve ng ATC. And from the drawing, from the curve of the ATC, ano kaya yan? Is it a profit or a loss? Okay, if you answer it's a loss, you are correct. Kasi it's way above your marginal revenue curve. So, yung space na yon, okay, yun yung dati nating pink area. Pero ngayon, may bagong curve. The red curve, which is your average variable cost. Remember that ATC, or average total cost, is composed of average fixed cost and average variable cost. So, you see that the space between the blue and the red, that's the average fixed cost. Kasi ang iyong average variable cost is given by the red curve. So, syempre, tinanggal mo na yung fixed cost, kaya mas mababa ang AVC. Ano ngayon ang critical dito? Ma'am, yung pong ATC is way above the Mr. DARP. So, kailangan, ito po ay loss, kaya po tayo magsha-shutdown. Okay, hindi parate. If the firm can pay or can cover its variable cost, they can still operate.
Okay? Ang ating decision dito, kapag ganito ang graph, produce. Okay? Do not shut down yet. Kasi, kaya mo pang bumili ng iyong variable materials. Like, let's say, raw materials mo. Kaya mo pang bumili ng, let's say, peanuts, sugar, oil. Alright? So, yung hindi mo mabayaran, ay di yung ilang fixed cost mo. Pero, kaya mo pang mag-produce because you can still buy your raw materials or your variable cost. You can still pay for them. So, therefore, if AVC is lower than Mr. DARP, then you can still operate. Decision here is produce. Pero if AVC and ATC is way above the green line or Mr. DARP, then shut down. Alright? So when do you shut down? When average total cost and average variable cost are above Mr. DARP, shut down. If average variable cost is lower than Mr. DARP and ATC above Mr. DARP, you can still produce. Do not shut down. Okay? If ATC and AVC are both below Mr. DARP, okay, of course, you produce. Alright? And then the lower your ATC, the lower your AVC, the higher profit you can get. Alright? So here is your cost curves and your marginal curve, and this is how you analyze it. But this analysis is perfectly competitive in the short run. All right? I do not have a slide for it, but I'm going to discuss it. But there is a perfectly competitive analysis in the long run. So what happens to profit in the perfectly competitive in the long run? Because you have seen that the profit in the perfectly competitive market short run analysis is positive. Okay? And the thing is, in the long run, supply and demand can adjust, isn't it? But since you're the firm, edi ang perspective natin is supply. So in the long run, when people can see that their neighbors or their friends or kung sino man ay nakikita nilang nag-earn ng profit, do you remember our characteristic? Ease of entry and exit. No barriers to entry. So therefore, anybody can just penetrate the market. Anybody can just enter the market dahil wala namang malalaking capitalization of or government rules or raw materials na makakapagpigil sa kanila para mag-join sa market. So what you can imagine is your supply curve moving to the right. Pwedeng dagdagan kasi nga madaling pumasok sa market. And with the supply curve moving to the right, what do you think would happen? You would have a lower equilibrium price. Pag bumaba yung price sa mas mababa kaysa sa P, that is your new equilibrium, but that eats up the profit being earned by the firms in the perfectly competitive market. So what does that mean? Kapag halimbawa, di ba 10 pesos kanina, kapag nag-move ang supply curve in the market graph to the right, posibleng let's say i-assume nating bumaba sa 8. Eh kanina yung space between 8 and 10, eh yun ang profit mo, di ba? Okay? So ngayon, kinain na yun. Dahil nang nagkaroon ng karagdagang magbebenta o suppliers in the market, therefore, kinakain ng mga new entrants yung profit na ini-enjoy ng mga sellers before. Remember, this is in the long run, right? So in the long run, what happens to profit is that it approaches zero. What does that mean? Because people can just enter the market, they drive the profit to zero. Pinag-aagawan na nila yung remaining profit up to the point na nagiging break-even na lang lahat. So, kuminsan, kapag tuloy pa rin ang pasok ng mga sellers, yung ibang mga sellers, they will not survive and exit the market. Kung mas marami ang nag-exit, di magkakaroon uli ng profit. Pero, makakakita na naman yung ibang mga tao na may kaunting profit, papasok na naman sila. So, in the long run, it stabilizes at zero profit. Again, to sum that up, in the short run, profit in a perfectly competitive market is positive. But in the long run, it approaches zero. Thank you. Please review this video and hopefully you can explain the different curves, short run and long run profit maximization under perfectly competitive market.